Good morning and welcome to the market forecast. It is Monday, June the 14th. My name is John Hoagland. Thanks for trusting me with your time. It's Flag Day today. Go ahead and hang Old Glory outside today. As always, we're going to be looking for accurate context, good risk management, and patience for all of us. We've got a lot of economic releases this week. Let's take a look. Nothing really important today. Not really. But tomorrow we have the FOMC meeting beginning. We have PPI, final demand retail sales, Empire State Manufacturing Index, Red Book, industrial production, business inventories, and housing market index. That's all tomorrow between 7:30 and 9 a.m. Central. Wednesday, housing starts and permits, import-export prices, the EIA petroleum status report at its usual 9:30 Central Time, and then the FOMC announcement at 1 p.m. and the Fed Chair Conference at 2:30 p.m. 1:30 p.m. Central. The FOMC announcement kind of steps on the group coaching, so I usually start that about 5 minutes later on FOMC day. I'll put the link in to sign up for group coaching as we go through the forecast here this morning. Thursday, as usual, our jobless claims number on Thursday, Philly Fed on Thursday, misleading indicators, and the Nat Gas report. A whole bunch of bill and note auctions and announcements. And then Friday, we have quadruple witching. So there's a lot on the table for us as far as opportunities and potential market moving events as far as economic numbers are concerned. This morning, U.S. stocks are kind of ready to start the busy week of economic data, steady to mixed. All eyes really kind of focused on the FOMC release as rollover crawls to an end. We will end rollover with expiration and quadruple witching on Friday. Investors and traders see kind of mixed activity awaiting all of the information due this week. Some maybe some muted movements, at least in our equities markets. We've got crude oil on the market, on the move. Gold, potential market state change to the downside. There's a lot going on already this morning. We're going to take a look at those shortly. Apparently, Elon Musk has come to the Bitcoin rescue after suggesting Tesla may return to accepting the digital currency again for payment. Crude rallies continue. The crude rally continues as global travel and flights are near pre-COVID levels now. As always, I like to ask you to like, share, comment, question, feedback, heckle, and subscribe to our YouTube channel so you can get notifications when we do go live. Checking the VIX this morning, down 3% at 1558. The volatility really kind of being sucked out as the market continues to push to higher levels. You get the NASDAQ potentially taking out the all-time high today. Dollar index still holding steady above 90 at 90.51, and the 10-year yield up slightly this morning at 1.46. As always, love to say good morning to everybody. Brian, first one here. You win the prize. Da H. Ednelson. Theo, good to see you. Jason, Bill, Felipe, Joe West, good morning. Happy Monday, everyone. Yes, happy Monday. Vince, good morning. Richie B, Laura, Zurain, Tone, Mr. Shine's Mystery Channel. Good morning, Keith. Murph, good morning. The chef, Mr. Magallanes, is here. Vici, good to see you. Miguel, Sharon, Frederico, Tim, James, Andre, and George Adams. Good morning, everyone. Okay, as usual, we had things running very smoothly here this morning, and good morning, Taurus. And now I've lost the charts, so I'm going to get the charts up here. I'll keep an eye on it for when we, if I lose them again. I don't know why this happens. Just happens kind of randomly from time to time. So let me get those back up here, and we'll start again with the daily in crude. As soon as it comes up. And here we go. Okay, off to the daily in crude. So obviously, we had kind of a standoff at the end of last week with weekly kickoff high, so it remained the current weekly kickoff high. We have moved above that. We are currently possibly putting a third point of contact on this trend line that goes way back to here back in March. So, this is a potential resistance area. It's a visual that traders are looking for. It is rollover week this week. Try and remember that. We lost 21,000 in open interest on an up move on Friday. We're seeing that move continuing. It's going to be blurry. Volume is going to start to move into the August contract. Open interest is going to be blurry. Our upside structure remains pretty strong. This is certainly a demand-driven market because a lot of people moving around again as the COVID lockdowns are released, and lots more air travel. Therefore, we're seeing higher crude prices. Last week's high is the weekly kickoff level. So this is an important level. There's a couple of confluencing levels there. We're above it. We've just opened. We've opened with a gap. My question is, if we can't get above this trend line, we get an opportunity to come back to weekly kickoff high and last week's high. Are we going to hold there? Are we going to accept above that level, or are we going to reject and fail to accept above that level? Take a look at the 30-minute chart here. So here's last week's high, basically the high of the regular trading hour on Friday was resistance. Settlement is here, 70.91. The market kind of holding overnight longs here and kind of catching a bid here about an hour before the open. We've just opened up. We've opened with a gap, so now we can use gap rules. If we can't close the gap relatively early, we look for opportunities to go in the direction of the gap, which would substantiate higher pricing above an important inflection level. So we are going to be kind of monitoring here. I don't see that the opening range is the high or the low of the session here. That can be helpful for us. If it's not, try and be patient. Look for a pullback to see if we can close the gap. This is an important level. If we get back down to this weekly kickoff level and last week's high, there's fish around here. There's fish. Okay, looks like we're starting to come off a little bit. Perhaps an adjustment in overnight inventory could give us that opportunity to see if we can catch a few fish down here. And the S&Ps. Okay, look at how far the weekly kickoff high is. It's just kind of holding structure. It's continuing its grind to the upside. It is in rollover. Finishing rollover, that is. We've got our last week's high here, which is going to be somewhat pivotal for us this morning. It's an early reference in the week here. If we can't hold above last week's high, we may see a nice little pullback, but I think we've got a long way to go before we find areas where the market state may change. I think we've got to stay above this 42 to 41 level in order to bring any substantial change to the market state, if we even get that opportunity. It's critical to hold this lower end of this previous balance here. That's why our weekly kickoff level is right there. It's there goes the charts. Oh, nabbit. Hang on one second. I do apologize about this. I don't know why. It just tends to happen from time to time here. Just when I think I've got it fixed, it happens again. So here we go. Last week's high, early reference, lots of anticipation as economic numbers come out as the week goes on. A lot of folks thinking maybe just some hedging, some rollover activity, and some kind of jockeying for position before Tuesday, Wednesday, and Thursday's important numbers come out. Here's the 30-minute chart. Another all-time high in overnight session. We just put in the all-time high on Thursday in the regular trading hour session. we've now put in another all-time high in the overnight session. We know that the market doesn't like that. We're not going to be opening with a gap. We're going to be probably opening above value, which could be supportive for us. Settlement is right in the neighborhood for where price is now, so we don't have any overnight inventory with which to deal with. I'm going to be looking at last week's high for opportunity. If we can't get up there, then we may kind of remain back in value from Friday and Thursday and kind of wrestle with this area for a while. As far as looking for fish, if we're organized to the upside, point of control is going to be an interesting spot to look for an execution. Value low, of course. If we can't accept in value from Friday, then this whole area here looks like an interesting spot as well. Early reference last week's high, pivotal. If we can get above there and accept, we can continue this move to the upside. If we can't get up there, we may see the market come back, kind of rotate in this area for a little while and look for some decision making. But a lot of the decision making is going to be coming later this week, Tuesday, Wednesday, Thursday, with the numbers coming out. Today, I think, is more of a day where we may find just traders jockeying again for those positions and rollover activity continuing. Here's the NASDAQ, the daily in the NASDAQ. So here we are. Here's that all-time high. It was in the overnight session. We're taking a stab at it today, it looks like. Again, in rollover, open interest is a little bit blurry, but we see an increase in open interest of 9,800 contracts to the upside here. So it seems like money is still coming in. The upside structure is still strong to the upside. And again, we're eyeballing that all-time high. Again, just like the S&P's, last week's high is going to be early reference and somewhat pivotal for our activity for today. Are we going to be seeing a ballistic move to the upside? I don't think so, because again, a lot of folks are going to be hedging and jockeying for position for the next 3 days of economic data. 30-minute. And we've got a few longs. Settlement is down here. 13,985.75. Put that on your charts. Kind of a target-rich area here. If we can get an inventory adjustment back to this kind of pivotal last week's high and settlement area, could be an opportunity. We may be able to find some fish there. Again, I can't stress enough, it is still rollover, and with the numbers coming out this week, it's likely to be a little bit more muted. I mean, we saw some muted activity last week, and it may tend to continue to do that as we have new information coming out as the week goes on. Then here's the gold. Okay, we had a really nice trend line up here. There's so many points of contact. The fact that we broke this last night has us now below weekly kickoff low of 1855. This is a substantial move, and I don't want to step in the way. This is a potential change in market state. We had a rally, we had congestion, we've broken out below that congestion level now. Are we going to see pricing continue to the downside? The market is out of balance now. There is, again, a possible new market state. Take a look at the 30-minute chart. We're going to have some very extreme overnight shorts, and there goes the charts. Let's get those up again. Give me 1 second. And here we are. Okay. So last week's range was relatively small. We were going to get upside digestion. We broke out below that trend line. We're working on acceptance below weekly kickoff low now. Initially, the opening range was the low of the session, which might have given some opportunity to the upside if we were going to unravel some of our overnight inventory, which is very short. 1879.60 is settlement. All night long, we saw more and more sellers coming in and bringing this market to lower and lower pricing. All of these overnight shorts are looking for longer time frame traders, U.S.-based traders, to continue this push to the downside that began on the breakout of that trend line, now holding below weekly kickoff low. There is great potential, also probably some higher risk in this market for us today. 1855 is going to be pivotal. I think a lot of folks are going to be looking at that number. If we're short up here and we can't hold this 1855 number, that may be enough to have an inventory adjustment back towards settlement, back maybe to last week's low. Gap close, is a gap close likely here? It's kind of a big gap. So, but again, if we get the move and we can't close the gap, that's indicative of more continuation to the downside, possibly being a potential opportunity for us. And euro. So with gold goes the euro. The euro actually kind of preempted today's or last night's downside move in gold, a very organized downside move, might I say. So, this is still somewhat range bound. I'm not seeing that we've got a break in market state yet. Our longer time frame is to the upside, but now we've started in a shorter time frame to put in lower lows and lower highs. Do we need to start to look to sell strength as well as buy weakness? That may be the play for a little while here, is weekly kickoff high and weekly kickoff low, and price is pretty centrally located between them. Last week's low was supportive last night. Last week's high is yet to be checked. So we did add 6,500 on this move to the downside, and again, that can still be somewhat rollover related. Take a look at the 30-minute chart. It's going to tell us that there was no real early indication of an early execution. The market really kind of opened near the high of value. In value actually seems to be continuing to push to the upside. There are some unfinished possible business up here. This naked point of control from Thursday is certainly a visual target if the market does recover off of last week's low, which it seems to be doing right now. But again, in value or in range at least, the market's kind of in balance here. And it is kind of, if you look back here, we're at the lower end of the area of balance near a potential breaking point of that. So we're headed the other direction. I'm going to try and stay patient in this market. If I can find a good trade location where I think there might be fish, that I can limit my risk, then I can find an execution. Oleg, the weekly high and low in the Nasdaq. Okay, it is the high from Friday, which is 13,990 and a quarter, and the low from Monday, which is 13,685. There goes the charts again. Let's get those back up. I do apologize for this. The gremlins are back. And let's take a quick look through the 10-year, and we'll get ready for our trading day here. Okay. Volume drops on Friday. Open interest drops on Friday, 2,300. Would you say that this might have been a profit-taking event from the directional move that we've had? I'm looking for this market to really try and hold weekly kickoff low, which is 132 and 21/30 seconds. Where it looks like we may be heading for an opportunity to test that. It's kind of falling into upside digestion as long as we can not reaccept below the weekly kickoff low, again, 132.21. Take a look at the $30-minute chart. So we have last week's high right here. We have settlement right here. We were just hugging settlement until we got this move to the downside, which we've seen that the 10-year yield has slipped a little bit lower actually. We may have recently seen a little bit of a pop in that, a little bit of an uptick, and it's up just 1/100th of a percent or 2/100ths of a percent today, and that's got price moving lower. So opening in value, driving below. The next area I see fish might be value low from Thursday. We do have a little bit of a low volume node here from Thursday, and this little volume shoulder here might also be an interesting opportunity. It's a little bit more risk than I'd like to take on a trade like that, but it does offer that opportunity. Okay, so it's just Monday. Looking for an interesting trading week. Don't forget, there's so much information Tuesday, Wednesday, Thursday, and quadruple witching on Friday. Some good opportunities. Make sure you manage your risk well. We're always, looking for those opportunities that offer just a little bit of risk for much bigger rewards. They're out there. You can find those fish. Let me put the group coaching link up so you can get signed up for that. I really enjoy those sessions on Wednesdays. Again, because of FOMC, I'll probably start at about 1:05 instead of 1 o'clock, just so that the folks can see what happens if there's any changes to the FOMC. We're not expecting anything to change. They're really trying to just hold pat with what they're doing while facing potentially increasing inflation. It's going to be an interesting one. I think the more interesting thing will be Powell's testimony at 1:30 Central Time on Wednesday. So, okay, it's Monday. Going to try and stay patient. Good morning, Rick. Good to see you. And I'm going to take my deep breath. I'm going to stay humble, grateful, and creative in my trading today. Mondays are typically not my best trading days, so I'm going to be patient and wait for the market to come to me to tell me there's an opportunity here. Go find some fish. Go find some fish today. Get out there and profit. Trade well. We should see Dan for the market recap today. And I'll look forward to seeing you again tomorrow. Trade well. Get out there. Have a great trading day.